Jeff Bezos sat down on national television and told America, word for word, that even if you doubled his taxes, it wouldn't help the teacher in Queens. He said it with a straight face. Then he went home and wrote off a $500 million superyacht on his taxes. And then a $75 million mini yacht that he uses to reach the big yacht. This video is about what the ProPublica tax files actually reveal. And by the end, you'll understand exactly why that teacher in Queens matters so much to Jeff Bezos. Jeff Bezos built Amazon from a garage in Bellevue, Washington in 1994. Today it's a $2 trillion company. He's the second richest person on Earth, with a net worth of roughly $220 billion and growing. But here's the thing about extreme wealth at this level. It doesn't just buy things. It buys influence. It buys narratives. And occasionally, it buys a seat on a CNBC interview where you can tell America that taxing you further is basically pointless. Earlier this month, Bezos sat down with CNBC, a business network, by the way, that has never once featured a show about unions or workers' rights, and made the case that taxing billionaires misses the point. He talked about Trump being mature and disciplined. He said business leaders need to be involved in government. And then he dropped this line. Insert Bezos CNBC clip. You could double the taxes I pay, and it's not going to help that teacher in Queens. I promise you. That's the claim. That's the public narrative. Now let's look at the actual numbers. Because the ProPublica tax files exist, they're real, and what they show is extraordinary. Before we get to taxes, let's establish what Jeff Bezos actually spends his money on, because it's relevant. Very relevant. In 2021, Jeff Bezos commissioned a super yacht called the Kourou. It is 127 meters long, that's 417 feet. It cost approximately $500 million. It has 3 masts. It is one of the largest sailing yachts ever built. It was constructed in the Netherlands at a shipyard that had to remove a historic bridge just to get the boat out. But here's the part that matters for this video. That $500 million yacht? Written off. On his taxes. Through his business holdings, that purchase becomes a tax deduction. Gone. So one of the most expensive private yachts in human history, paid for in part by the American tax system. And it gets better. Because the Kourou is so large, Bezos also needed a support vessel to follow it around. A $75 million chase boat, also written off. That $575 million between both vessels. Let me put that in context. That's enough to pay for school supplies for every public school teacher in the United States for years. The same teachers Bezos mentioned by name in his interview. Now I want to be careful here. Writing off assets through business structures is legal. Bezos didn't break any laws. That's actually the point. He operates within a system that was built to allow exactly this. And he has more ability to shape that system than just about any other human being alive. Which brings us to the tax files. In 2021, ProPublica published what they called the IRS files, a trove of never-before-seen tax records for America's wealthiest individuals. They're real documents. They're verifiable. And what they showed about Jeff Bezos is something his PR team would rather you never saw. Between 2014 and 2018, Jeff Bezos' wealth grew by $99 billion. That's not a typo. $99 billion. In 4 years. During that same period, he reported income of $4.22 billion to the IRS and paid $793 million in taxes. Run the math. $793 million on $99 billion in wealth growth. That is a true tax rate of 0.98%. Not 10%, not 22%, not the 37% top marginal rate you've probably heard about. 0.98%. Less than 1 cent on every dollar of wealth he gained. And it gets more specific than that. In 2011, a year ProPublica specifically flagged, Bezos' wealth held roughly steady at $18 billion. He filed a tax return that year, reporting he lost money. His investment losses offset his income. And because he technically made so little according to tax law, this man worth $18 billion, he claimed and received a $4,000 child tax credit. That credit exists to help working families. He used it while being worth $18 billion. And here's the full picture. From 2006 to 2018, 12 years, Bezos's wealth grew by $127 billion. Total taxes paid in that period? $1.4 billion. Meanwhile, the ProPublica piece showed that for typical American households over that same span, total taxes paid actually exceeded their total wealth growth. The average person paid more in taxes than they built in wealth. Bezos paid $1.4 billion on $127 billion in gains. Now, and stay with me here, because we haven't even gotten to the Amazon corporate tax piece yet. And that number is actually bigger than everything we just covered. Bezos's personal taxes are only part of the story. Amazon, the company he founded, that made him the second richest person alive, has its own relationship with the tax system. In 2021, Amazon was supposed to pay roughly 21% of its profits in corporate income tax. That would have been approximately $7.3 billion. What Amazon actually paid? $2.1 billion. That's an effective corporate rate of just 2.1%. The difference, $2 billion, gone, not paid, fully legal. Through depreciation, stock-based compensation deductions, and research credits baked into the tax code. And then there's the lobbying. In 2021, Amazon's registered lobbyists filed 129 communications reports with the government, more than double Google, the second-place tech company. In the 4 years after Canada's Liberal government took power in 2015, Amazon increased its lobbying presence more than any other tech firm in the country. Globally, Amazon has successfully killed or weakened privacy protection legislation in more than 36 bills across 25 U.S. states. So when Bezos says, in that CNBC interview, that there's too much business influence in government, he's saying that while running the single most aggressive corporate lobbying operation in American tech. You can't make this up. Now let's go back to that line. You could double the taxes I pay, and it's not going to help that teacher in Queens. Let's actually test that claim with real numbers. According to data from educator advocacy groups, American public school teachers spend between $500 and $900 out of pocket every year on classroom supplies, pencils, paper, books, because their districts don't cover it. The national average classroom supply budget from most districts? About $200 per teacher. In New York City, where that Queens teacher lives, the public school system spends $42,000 per student per year in total funding, and yet teachers are still coming out of pocket for basic supplies. Now, the tax write-off on the $500 million Superyacht alone. If that had been paid in taxes instead, it would have funded classroom supply budgets for every public school teacher in the United States. Every single one. Multiple times over. And Senator Bernie Sanders' proposed 5% wealth tax, according to his own analysis, would raise starting teacher pay to $60,000, give $12,000 annually to working families of 4, expand Medicare to cover dental, vision, and hearing, guarantee universal childcare, and end homelessness. Under that proposal, Bezos' wealth would drop from $279 billion to $265 billion. He would still have $265 billion. So when Bezos says doubling his taxes won't help that teacher in Queens, he may technically be right about doubling. But a 5% wealth tax? The one he's specifically lobbying against? That's a different conversation. Here's what makes this more than just a story about one billionaire and his yachts. The ProPublica piece wasn't about Jeff Bezos alone. It was about the top 4 American billionaires, Bezos, Musk, Bloomberg, Icahn, and how they collectively paid true tax rates of under 1% during their peak wealth growth years. It revealed a system where the rules are different depending on how you hold your wealth. If you earn a salary, you pay income tax. If you own stock that keeps going up but never sell it, you pay nothing, because unrealized gains aren't taxed. And if you're worth $279 billion, you can borrow against your stock, Literally take loans against your wealth to fund your lifestyle, and pay the loan back later with lightly taxed capital gains. It's called buy, borrow, die. And it's the primary financial strategy of virtually every billionaire you've ever heard of. Amazon also won a government supply contract in Canada during the pandemic. And to this day, Amazon hasn't disclosed why it lobbied the Prime Minister's office in the period right before winning that contract. This isn't a Republican issue or a Democrat issue. This is a structural issue. And Jeff Bezos, sitting in that CNBC interview, in a warehouse they couldn't even properly soundproof, praising Donald Trump as more mature and disciplined, is one of the architects of that structure. Jeff Bezos spent $575 million on yachts and wrote them off his taxes. Between 2014 and 2018, his wealth grew by $99 billion, and he paid less than 1% of that in taxes. In 2011, worth $18 billion, he claimed a child tax credit. The teacher in Queens is still buying her own pencils. That's the front row seat. That's the reality behind the wealth. If you want to go deeper, we've already covered Elon Musk's hidden compound, and next we're going inside the buy, borrow, die strategy that every billionaire uses to pay almost nothing. Subscribe so you don't miss that one. Drop a comment. Do you think billionaires should pay more in taxes, or is the current system fair? I want to hear both sides. I'll see you in the next one.